Welcome, everyone, to our discussion on Chapter 14 and the Statement of Cash Flows. So, I'm just going to go through some questions that I feel may be similar to the ones on the final exam for Chapter 14, and just talk about other things that I think may be helpful to know. Alright, so looking at these, this is a kind of a rough statement of cash flows that I've made, and if you notice, it's based on some of the numbers it's the same numbers from page 4 of your chapter 14 packet, and the same questions too, just questions I feel important to talk about in case there was some confusion in class. So, first thing to notice when we're talking about the statement of cash flows is we see that it's separated by the three different activities that we've talked about in class: operating, investing, and financing. And then we also see how there's like a total cumulative number based on that activity. So these three numbers off to the side here. And then you just net those numbers together to get the net increase or decrease in cash. And then you just add or subtract that from your beginning cash balance at the beginning of the year, and then you get your ending cash balance. And then, of course, your ending cash balance becomes your beginning cash balance for the next period. So let's look at these questions. Did cash increase or decrease from the prior year, and by how much? So it's saying it wants to know how much total cash increase or decrease. So we can just look at this one here after we've netted all the other types of activities, and we see that cash decreased by 2100. Easy enough. Now I could have also asked how much did cash increase or decrease from investing activities. Well, then you could just look at this number right here, and you could get that answer pretty easily as well. It would be decreasing by 8,600. So the second question, what activities cause the decrease? Well, we're just going to look at this one and this one, because this is a positive number, the 14,300. So the two activities associated with this is 7,000, the operating activity and the investing activity. So O and I. I'm just going to abbreviate it. So this last question here is more like conceptual and thinking. Should investors and or creditors be concerned? I'll give you a second just to kind of think about it, and I'll give you my thoughts. All right, so my thinking would be that investors and creditors should be concerned mostly by the decrease here in the operating activities. So you really want to see a positive cash flow from operating activities, because our operating activities are the activities the company does day to day. So if you're not making money from like selling your product or doing what your company's supposed to be good at doing, it's not looking too hot. I mean, there are certain circumstances where it's going to be okay. Like if you're a startup and you're just having to purchase a lot of things and you're not making a lot of money yet because maybe people don't know about your product or service, maybe it's okay then. But you definitely want to see a positive number in the operating activities. Now, a negative cash flow from investing activities is actually quite normal, because companies want to use their cash to, invest in stuff. So they want to purchase land, like what they're doing in this problem. Now, they're selling equipment here, which you don't want to see, but because you want to see companies invest in equipment so that their product or service can get better. But this is just an example problem. So they're showing probably how you net the 10,000 and the 1,400 to get the 8,600. So those are my thoughts on that third one. So we've already done this before in the class, labeling the following as operating, financing, investing, or none, and also labeling if cash is increasing or decreasing. I just want to go through it again to kind of like A, review, and B, to talk about kind of like some new transactions that we've come across since we did that in the beginning-ish of the semester. We can talk about some new transactions. And before you start, I would look at this little cheat sheet right here that I'm going to make. So operating activities deal with like assets on the balance sheet and accounts on the income statement. So obviously it's going to deal with assets because all of these are going to be dealing with cash if they're going on the statement of cash flows. But also like when you buy inventory or you like get cash from accounts receivable, it's going to be under operating activities. So, and then income statement accounts. So like when you make money from sales, that's going to be an operating activity. Or when you pay like money for like a repair expense or something, that's a part of the day-to-day parts of the business. So income statement and assets. So then investing activities are going to be the long-term assets portion of your balance sheet. So it could be long-term assets or it could be PPE, whatever you prefer. So it's going to be like PPP and then other assets that are considered long-term. And remember, PPE is property, plant, and equipment. And finally, we have financing activities, which is going to deal with shareholder equity accounts and liability accounts. So like when you have like a note payable and you're getting cash from it, that's a financing activity. Or when you issue stock and you get cash from that, that's going to be a shareholder's equity account. So try and label these and note if they're increasing or decreasing cash on your own really quickly, and then we'll talk, or then I'll go through them. All right, so this first one, cash collection from sales. That's going to be an operating activity because obviously, just thinking about conceptually, you should be collecting money from sales as like a normal business operation. And then it's also an income statement, sales. That's an income statement account. So it's operating. Purchase of equipment, that's going to be investing. Oh, forgot to note if it was increasing or decreasing. So you're collecting cash, so obviously that's a plus. Purchase of equipment, so that's investing because it's part of PPE. That's going to be minus because looking at the key words here, purchase. I'm sure you're all thinking, come on, Eric, that's kind of common sense, but you'd be surprised. All right, payment of a dividend. So that's going to be financing. And again, payment of a dividend. So cash is going down. Remember, dividend is part of shareholders' equity. It decreases it. So that's how another way to know financing activity. Payment of principal on note. So again, this is going to be financing activity and payment. So cash is going down. Note, again, it's a liability. So that's how we know it's financing. Now, this is the one tricky one that a lot of people get wrong. So payment of the interest on the note, that's going to be operating activity. It's going to be decreasing. So again, interest expense, boom. A lot of arrows pointing to the income statement there. Payment for patent that will last for 20 years. So that's going to be investing. It's going to be negative. So it's going to be on your long-term assets. And it's going to be a intangible asset. There we go. Wrote off an account as uncollectible. So this is the one account that the one transaction I put in here that's going to be none. Come on. There we go. So repurchase treasury stock. So treasury stock, remember, it's part of shareholders' equity. It's a contra shareholders' equity account, but it still decreases So it decreases shareholders' equity, but it's still technically a part of shareholders' equity. So it's going to be financing. And remember, when we're repurchasing it, that just means like we've already like given stock to shareholders and now we're just buying it back. So that's why cash is decreasing. So keep this in mind, and questions where you have to classify things should be much easier for you. So now here's how like a question like that I think may look on the exam. So I think she might just line up like a bunch of different transactions, and then you have to figure out, well, how much is net cash from finance activities, how much is cash, or what is net cash from investing, and what is net cash from operating. And these would probably be like, each of these would be like a separate question. All right, and we'll talk about these in the next video.